What's going on? It's your boy, What the Duck here, and it's time for another trading class. Okay, so you've been buying and selling stocks, whether they be the blue chips like Facebook, Google, Amazon, Tesla, all those companies with CEOs who have way too much money for their own good, or penny stocks, which although they are called penny stocks, they're actually just stocks priced under $5 per share, such as Wader, WTRH, Expa, and Isaiah. Don't even get me started on that CEO. When you buy any of those stocks, you acquire the shares of the stock. Those shares are yours. You own them. Like when you buy a house or a car, it's yours. Now, not the whole company, obviously, but the amount of shares that you purchased are now your property. Now, when you purchase an option contract, it's not the same thing. You don't own anything. All that you purchase does is give you the ability, not the obligation, but the ability or the right to buy or sell a stock at a predetermined price. There are two types of options, calls and puts, and we'll be going over the very basics of calls today. When you purchase a call, you're basically paying for the option, and it's an option because you're not obligated to buy. Typically, it's 100 shares of a stock at a certain price, which is called the strike price, which we'll go over later, on or before an agreed upon date. So, think of it like this. I used to live in Nevada, and one thing that was legal there, and no, I'm not talking about prostitution, I'm talking about gambling. One form of gambling is sports betting. So, let's say in the beginning of the baseball season, and I'm not talking about the new baseball season of 60 days or 60 games, I'm talking about the normal baseball season. Anyway, it's the start of the season, and you think that the Mets are going to win 90 games, which probably isn't going to happen because, well, they're the Mets, and I'm a Mets fan too, so yeah, let's go Mets. Anyways, at the start of the season, the odds of the Mets winning over 90 games are super low because a lot can happen between now and then. And because of this, you purchase a bet that they will, and you're looking to make around $500 for a win. So you're making a bet that they're going to win 90 games and you're looking to make around $500. You might have to pay, let's say, $20 to take that bet because the chance of that happening is low because we're so far away from the end of the season. Now, of course, every team has different odds at the start of the season. Maybe the Yankees have a better chance of winning 90 games due to their roster being better or they're having more money or whatever. So if you're looking to make a $500 win on a bet for the Yankees, you might have to pay $60 because you have a better chance of winning that bet, so it's more expensive to buy the bet. But let's say we're halfway through the season and the Mets are currently 60-20, meaning they have 60 wins and 20 losses. Now, instead of being able to pay $20 for a bet where you're looking for a $500 win, that same bet may cost $100 because the chances of them winning 90 games that season now that they're already at 60 wins and we're halfway through the season is greater than the odds of them winning at the start of the season. At the same time, if we're halfway through the season and they're 20-60, which is more likely for the Mets, meaning they have 20 wins and 60 losses, you might only have to pay, let's say, $5 for that bet because the chance of them winning 90 games, now that they've only won 20 games so far and only have around 80 games left, is a lot lower than the chances of them winning 90 games was at the start of the season. A bookie doesn't care when you take that bet. It could be at the beginning of the season, the middle of the season, or even close to the end of the season. They don't care how close the team is to winning those 90 games. 9 out of 10 times, they'll let you take that bet because all they care about is the odds of you losing that bet, which is why he would offer more money in return for you taking that bet at the start of the season as opposed to halfway through. Because he wants your money, and if the return is greater, the chances of you taking that bet is greater, but the risk is also greater. In option trading, calls work somewhat the same way, but before we get into that, let's just quickly go over some of the terms of option trading and what you're looking at when you're looking at a call. So, here we're looking at Tesla's homepage on Robinhood. So what you're going to do is click Trade right there, and you'll see the button for Trade Options. You're going to go ahead and click that. Now, if you don't see that, this means that you haven't been approved for options trading, which you'll have to do by going to your profile page and answering a few questions on Robinhood. But it's quick and easy, maybe even too easy, but anyways. You're going to go ahead and click that Trade Options button, and you'll be brought to the Options home screen of Robinhood. In this case, it's for the stock Tesla. Now, we'll go over all of this in later videos and what all this stuff means and a big breakdown of options and just every single little part of it. But we don't want to do that all in one go because we don't want to overwhelm everyone. So for now, we're just going to do the basics of a call option. So this is the home page of Tesla's call option page. So at the time of this video, July 8th, Tesla is trading at 1,376. So let's say you want to buy a $1,400 call for July 17th. So be right over here. So you're going to make sure that you have the arrow pointing up selected, because a call means that you're bullish on a stock or that you think the stock price is going to go up. Then you're going to select July 17th. This is if you're looking for a July 17th call. And you'll scroll up until you find the $1,400 call. Once again, this is only if you're looking for a $1,400 call. Now, really quickly, this is an example. I haven't researched Tesla. I'm not saying to buy this call. I just randomly picked this as an example. Okay, so you see the $1,400 call, and on the right is the premium, right here. In this case, it's $51.15. This is what you're paying for the right to buy Tesla at this strike price of $1,400. So you got your strike price on the left and your premium on the right. So let's click the call. Okay, so this is the screen for the 7/17 $1,400 call for Tesla. Now the premium, as we said before, is $51.15. But with options, you're not just buying the right to purchase one share, you're buying the right to purchase 100 shares, as you can see right here. See underneath the contracts it says times 100 shares? So to buy one $1,400 call, in this case, it would cost $51.15 times 100, which is $5,115. So that's how much your premium cost really is if you wanted to buy this call. So if you're buying this $1,400 call at the $51.15 premium, you're paying $5,115. This is like paying $5,115 for the sports bet ticket that we were talking about earlier. Now, this doesn't happen much in sports betting, but if you were allowed to sell your ticket back to the booker at a later date, or sell it to someone else at a later date for the price that it's worth at said later date, this is how a call would kind of work. So, if a sports bet for the Mets winning 90 games is worth $5,115, and halfway through the season, they're now 60-20, which is 60 wins and 20 losses, the chances of them winning 90 games is greater than at the start of the season. So a booker now would charge maybe 10 times as much now for that same sports ticket, the 90-game win sports ticket, than they did at the start of the season when you bought it. So if you were able to sell your ticket, which is now worth 10 times what you originally paid for it, you're making $51,115 for that ticket that you paid $5,115 for. And your profit would be that minus what you originally bought the ticket for, which is the $5,115. In the same way, if the Mets ended up losing a bunch and halfway through the season they're 20-60, buying a ticket now saying that the Mets will win 90 games might be worth only $1,000 instead of $5,115 that you paid for it, because not many people are going to want to buy that ticket because the chances of the Mets winning 90 games is slim now. So if you try to sell the ticket to someone else, you might only get $1,000 for it, even though you originally paid $5,115 for it at the start of the season. So you just lost $4,115, and the Mets don't win 90 games that season, and you wait until the season is over, the ticket is now worth $0. So the premium price is based off of volume and interest. Basically, it's based off of what other traders are buying this call for or are willing to pay for it. Like with the sports betting tickets, the premium would be what the booker is selling it for, aka what it's worth in his and the gamblers that are buying its eyes. Technically, it's made up of numbers because technically it's a made-up number because if no one is buying it, then he'll have to bring it down so that people are willing to buy it, which is the same as a call premium. It's based off of volume and interest. With stocks, it's a little bit different because prices can go up and down, whereas with baseball analogy, once the team hits that 90 wins, it can't go back to 80. They have those 90 wins. You can't take away wins from a baseball team. But it's the same basic concept as sports betting. I guess a good way of putting it would be betting that Derek Jeter, I know he's retired, but let's just pretend it's 2010 or 2011, whatever year. So it would be like betting that Derek Jeter will bat 300, the 300 average, for the season. At the start of the season, that bet will be worth a certain price, which is your premium. And as the season goes on, depending on how he's doing, the premium price will change. It's halfway through the season now, let's just say, and he's batting 380. The premium or price of the sports ticket will be worth or cost more. But if halfway through the season he's batting 220, the premium or ticket will cost or be worth less. And a booker would be less willing to sell you a ticket that has a better chance of winning because they don't want you to win. They want to keep their money. Now that might have been a little confusing, but it was just a quick overview of how calls work, broken down into real-world examples. In future videos, I'll go over in detail what all the different terminology is, how to buy a call, what time decay means, what to look for as far as calls and puts go, and so much more. This is just class number 1. Like I said, I wanted to keep it really quick and simple, just so we don't overwhelm anybody, and I do hope it helped a little bit. I'm going to go quickly over some of the stats you can look at in Robinhood when checking out a call option. As you can see, you have the bid, which is the highest price that someone is willing to sell for immediately. And the ask is the lowest price someone is willing to sell for immediately. And the bid is the highest price someone is willing to buy for immediately. So that once again, the ask is the lowest price someone is willing to sell for immediately. And a bid is the highest price someone is willing to buy for immediately. So if you buy the ask, you'll immediately get filled. And same if you sell the bid. So once again, once you buy the ask, you will immediately get filled, and if you sell the bid, you'll immediately get filled. Kind of like when buying a market order for a stock. The mark in options is the midpoint of the bid and ask. The previous close, high and low, are self-explanatory. It's literally the previous close, high and low of the premium, not the stock price. Volume shows just that, the volume, the amount of option contracts traded for that day. And open interest is the measurement of the open contracts on the market. It takes into account the open buys and sells. Implied volatility represents the expected volatility of a stock over the life of the option. And under 60% is what I usually look for. And I honestly don't even use chance of profit. And we can go over the Greeks in the next video or a later video. All right, I hope that helped. This is just a basic starter video on calls. We'll go over so much more as we continue these classes. James Legends will also be joining us soon, as he's one of our options traders in the group, whereas I usually stick to stock trading, so I just go over the basics of options trading. Tomorrow's class will be on FinViz and how to use it to scan for stocks and read the market as a whole. So be sure to join us then. I'll be going into the new members program voice chat and answering questions there after this. So if you're not part of our premium Discord alert service, then you missed out on some of our great profits today, and you also are going to be missing out on our live voice chat. So be sure to join us at the link provided. It's also going to be in the details of this YouTube video. It's also right here, facebook.com/groups/btpenny. That's BTPENNY, as well as our Discord, discord.gg/btpenny. Once again, BTPENNY. In our premium alert service, we took around 80% profit on COCP, a crisp and quick 22% profit today and 30% profit overall on FLDM. And our total return on NIO is now up to 260%. So be sure to check out our Discord so you can join in on all the fun. We also have raffles, giveaways. Our amazing prizes for June's raffle consisted of a $100, a $75, a $50, and a bunch of $25 e-Visa gift cards, as well as some screener settings and technical and fundamental analysis sessions. We also donated $50 to charity as well, and so much more. We also have punchboard drawings where we draw a letter and a number, and the winner gets some great discounts as well as some great prizes. We have so many other features that are definitely worth checking out, including the new members program. This is the area specifically for new traders. It's a judgment-free zone where you can ask any and all questions you may have. We also have a ticker channel system where we break down the premium alerts. One of our ticker channels is DLPN, which a lot of our members took some great profit from. As you can see here, a lot of our members were able to join our DLPN, Dolphin Entertainment ticker channel, get a whole bunch of profit. This is just a way of breaking down all of our different alerts so that some of our newer members don't have to feel overwhelmed or confused with all of our great alerts, because there are a lot going on with the alerts, and especially for a new trader, it's easy to get lost in the mix, which is why we have our new members program to help everyone. And as you can see, it definitely worked. So really quickly, we're going to be giving out 10 raffle tickets for our homework. We're going to give 10 to our top 2 and then 15 to our top answer in the homework. Our post-trading class homework, this is about Tuesday's review overview. A lot of review overview. Tuesday's overview of alerts. Some of the past alerts we went over yesterday in our YouTube class, which you can check out on this channel. And we also have some pre-trading class homework for today, the options trading. So our our post-trading class homework is how did Austin's stop loss help him with Genus, however you want to say it. What is common among shippers? And when you find an alert that says adding here, what is a good step to take? And then our pre-trading class homework for today is what is the difference between a call and a put? What do you know about options trading, and are you confident trading options? And hopefully, a month or a couple weeks down the line, we're going to get a lot more people confident in trading options. We'll go over some of our homework answers now, and then we'll go over some of them later and see how people have improved, because that's all we're trying to do here is just improve everyone's knowledge and trading skills. So, in no order, our 2 and 3 winners for the 10 raffle tickets. One of them is going to be Enigma 1123. I believe he actually won, or he or she won last time, so congratulations, Enigma. You're doing a really good job with the homework so far. You said as far as Austin's stop loss goes, it is assured that he will still make profit if the stock tanked, which it did. So as far as what's common among shippers, you said reverse splits, which is correct. And when you find an alert that says adding here, what is a good step to take? Do a search for the original alert and any other things Austin/Lee, which are our stock gurus, have recently said about it. See if it's still below the entry point and that it's the right type of play for you, whether it be a day, swing, long, and look at the risk level. Because we definitely do recommend that our new traders try to take the less risky plays. And it also depends if I'm already in the play and what percentage I'm in. And they do some DD as well, which is due diligence, to ensure it doesn't overexpose them to a certain sector, which she's actually going over our homework on Monday, which is our class was portfolio diversification. And perhaps look at some other fundamentals or chart info. Our next winner of 10 raffle tickets is I'm Broke Now. Hopefully you made that name when you joined our free Discord, and we're checking out our free Discord alerts, and now you are no longer broke due to our premium alerts. So as far as how did Austin's stop loss help him with Genus, if the stock tanked, it ensured him profit, which it did. What's common among shippers, reverse splits, and when you find an alert that says adding here, what's a good step to take? Check for the original alert and make sure that it's the right buy for you. It may be a swing, a long, or a day trade. It's your hard-earned money, so make sure that you can take that risk, which is 100% true. We do not want you spending or investing or trading money that you cannot afford to trade. This is like a casino in the sense, like, except with 2 stock gurus helping us out, so it's less risk in the casino. But you bring money to a casino that you're willing to lose. You don't go there with your life savings or your car payment or your wife's wedding ring or whatever, anything like that. You make sure there's money that you can afford to lose, especially if you're just learning how this all works. We want you to be successful in trading and life, and being broke is one way of not doing that. So we definitely want to look out for you, which is also why we do all the raffles and stuff, just to help people out who are struggling. Just today, actually, someone paid for one of our struggling members' memberships for next month, and we appreciate that. And that is for the 10 raffle tickets. And our winner for 15 raffle tickets is Ivy. Once again, I believe you also won raffle tickets for last homework, so good job on that. So how did Austin's stop loss help him? He was able to get out at a higher price as the stock started to tank. Those who got stuck without setting a stop loss became bag holders, which is true. We got a lot of bag holders in all the other different types of forums, and it's fun, not funny, it's actually sad, but it's interesting watching all the other stock forums like Stockwits and all the comment sections and Webull and stuff, everyone complaining about holding a bag when we actually made profit on that alert. So that's why we try to get as many people into our Discord as possible so we can help them not become bag holders and help them become successful traders and make money, because times are hard and we're all human, we're all people. Like we want everyone to do well. There's no reason for us to want anyone to not do well. Same answer as far as the shippers go with reverse splits. And when you find an alert that says adding here, what's a good step to take is check the original alert. Is the average price below entry level? Do you have enough buying power to add in portions? And look to see what kind of play it is. Long swing, day trade. If this is your style of trading and all criteria are met, do some quick due diligence and see if it's the right play for you. As mentioned, it's your hard-earned money. I cannot stress that enough. It's your hard-earned money, and we want you to, well, A, make money with it, but B, just not, we don't want you to lose it. We all know how hard it is to just get by recently, especially with coronavirus. So our goal here is to help people. Definitely emphasis on helping people. That's why we have the trading classes and the homework and all this stuff to try to help. All right, see you soon.